Hey everyone, welcome back to Corporate Decoder, the place where we uncover the juicy details behind your favorite company's financial reports. Today we're diving into Aether Holdings Inc. and let me tell you, this filing is a wild ride from its Bitcoin treasury strategy to a rather spicy dispute with one of its directors. We've got a lot to unpack. So what exactly is Aether Holdings? If you're wondering, well, they're an emerging financial technology company using AI to give traders an edge through their platform sentimenttrader.com. They pull in data from all over the place like Bloomberg and the Chicago Board Options Exchange to give users insights on market sentiment. Now, this report is an amendment to a registration statement, meaning they're trying to sell more of their company's shares to the public. They've got aspirations to grow by both developing new products and maybe even snagging up other companies. Think of them as a fintech startup trying to make it big in the financial world. But like any company, especially one playing with AI and the volatile world of Bitcoin, there are some serious risks involved, and man, do they lay them all out. Now they're calling themselves an emerging growth company. This basically means they get to follow some slightly less strict reporting rules for a while. They're also a smaller reporting company, so they're still trying to find their footing in the public markets. And speaking of risks, they make it crystal clear that investing in them is not for the faint of heart. They have a whole section dedicated to just that, starting on page 11. But let's cut to the chase right now. What's really grabbing my attention is their plan to use most of the money they raise from this offering to buy Bitcoin. Yes, you heard that right, Bitcoin. They see it as a store of value, kind of like digital gold, and they're betting big on it. This is a huge move, and they're upfront about the wild volatility of Bitcoin. They say it's traded below $49,000 and above 111 a year. That kind of price swing can seriously mess with a company's financial health and by extension its stock price. And get this, their past financial reports don't even include these Bitcoin holdings. So what we're seeing now is a company fundamentally shifting its assets towards this very new and very volatile digital currency, which could lead to some crazy ups and downs in their earnings. Now, let's look at the money side of things. For the first 6 months of 2025, their revenue saw a slight dip of about 4.7% compared to the same period in 2024. That means they brought in less money. If we look at the full picture for the year ending September 2024 versus 2023, revenues also decreased by about 7.4%. This suggests they're not growing as fast as they might want, or at least their core business isn't right now. And check this out. Their general and administrative expenses, basically their overhead and corporate costs, shot up by a massive 57.4% in the first 6 months of 2025 compared to 2024. This is mostly due to higher professional fees, likely for this offering, and increased executive and director compensation. All of this means their loss before taxes has ballooned by over 150% when comparing those same 6-month periods. It's a tough financial picture right now with losses widening significantly. Back to the Bitcoin strategy, they're planning to use the bulk of the money from this offering to buy more Bitcoin. This is a really bold bet on the future of digital currency. And again, they stress this strategy is new, untested, and carries a truckload of risks. They're putting a lot of eggs in the Bitcoin basket, and if that basket drops, it could hurt them badly. Here's another interesting point. They're not registered as an investment advisor. This is important because if their content is seen as giving investment advice, they could be in hot water with regulators. They seem to be relying on a publisher's exclusion to avoid this, which is kind of like saying they're just sharing general information, not specific advice. Now for the drama. There's a nasty disagreement brewing with one of their directors, David Mandel. He claims he was promised the CEO job with a hefty salary and a chunk of company stock. However, the company's management flat out denies this, saying no such deal was ever made. Not only that, but Mandel apparently voted against this very offering. This is a clear sign of internal friction that could cause serious problems. Their stock is traded on Nasdaq under the ticker Aether. They've also applied to get their warrants listed, which are like options to buy more stock later. And here's a big one for investors to consider. Even after this offering, the company's top brass and major shareholders will still hold a huge chunk of the company's stock. This means they'll have a lot of power to make big decisions, which might not always align with what smaller shareholders want. If you're looking for dividends to live off, you're out of luck for now. They plan to reinvest all profits back into the business to fund growth. On a more positive note, they've had an initial public offering or IPO back in April 2025. That's a big step for any company, giving them access to more capital. Let's revisit the financials from the fiscal year ending September 2024. Total revenues were about $1.4 million, but their cost of sales was also significant. This resulted in a gross profit of around $994,000, but when you factor in operating expenses, which include a big jump in general and administrative costs, they reported a loss before taxes of nearly $940,000. Ultimately, this led to a substantial net loss for the year. It's clear that while they're generating revenue, the company is spending a lot to operate and grow, and they're not profitable yet. A major challenge for them is getting people to sign up and stick around. Their success really depends on attracting new customers and keeping current ones happy enough to renew their subscriptions and buy more. And then there's the AI factor. They're using AI in their services, which sounds advanced, but they're also warning about potential problems like legal troubles, damage to their reputation, and privacy issues. It's also crucial for them to hold on to their top talent. Losing key people, especially analysts and editors whose work is the core of their content, could really hurt the business. So looking at Aether Holdings Inc., it's a company with a clear vision but facing significant hurdles. They're trying to disrupt the financial tech space with AI and data analytics, which is a growing market. Their user acquisition and retention strategy needs to be a huge focus because that's where the revenue comes from. The decline in paid subscribers and the pressure on their average revenue per user, or ARPU, is a solid indicator that they need to really nail this. The widening losses, especially with the big jump in administrative costs, are concerning. Unless they can significantly boost revenue or cut expenses, they'll continue to burn through cash. The Bitcoin play is the wild card. It could be a massive win if Bitcoin continues its upward trend and they manage it well. But it's also a massive risk with all that volatility and regulatory uncertainty. And that internal dispute with director David Mandel, that's a huge red flag for potential instability and could distract management from the actual business. Overall, Aether Holdings Inc. is a company with an interesting, high-tech, high-risk strategy. They have the potential to grow, especially with AI and the digital asset trend, but they need to prove they can manage their costs, attract and keep customers, and navigate the treacherous waters of both corporate governance and the volatile Bitcoin market. It's a high-stakes game they're playing, and investors should proceed with extreme caution. Alright, that's our breakdown of Aether Holdings' latest filing. What's your take on their Bitcoin bet and that juicy director dispute? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to join our Discord linked in the description. Thanks for watching. See you next time.